Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Friday, November the 18th, 2016. Well, you can see here the gold futures chart as gold dipped down to a new low of 1201.30 before rebounding somewhat to close at 1207.30. You can see that the downtrend channel is still intact. We are in a negative pulse wave right now, and the market is hitting new lows. So that does not say that we've hit a bottom. The market is still searching for a bottom. It's still in a selling mode right now, or a corrective mode on the weekly chart. Um, I do believe that we're in the process of forming that bottom on the daily chart because you can see the elongated resistance line here. So we'll probably still search for this bottom, be somewhere soon around here. Then we'll just consolidate a while and allow these trend lines to converge upon each other to form a turn back upwards again. Um, if you take a look at the weekly chart, you can see a little bit better picture here, and you can see we do have a couple of weeks of consolidation before we hit the next ramp. All right, and that should be a nice reversal catapult, and then from there we should continue to move sideways to slightly higher until we get to the end, the last ramp. So 1300 is going to be the battle line. That's the current resistance level. So as long as the market can get back up there and close there, it'll be fine. But as we are right now, we're $100 away from there. So this is showing that there's still selling pressure. You can see this is the longer term chart. You can see that we're in a negative pulse wave on the weekly chart, and we're in a negative pulse wave on the daily chart. So we're not done selling yet. We haven't bottomed in this particular phase of the correction just yet. Still in the downtrend channel, and we're going to need to do something about that. But until then, this is where we are. And this is a spike high right here. So this high is not really a strong resistance. It's really a fake high because it was a spike, just like you did back here. You spiked, and then the market eventually took it out. And so when you see these like this is not necessarily real, and the market will eventually at some point come and take that out. We did it here too, the first, not really a spike like this one, but you can see the idea here. Spike, correct, take out the spike, form another one, correct, rally, come down here, spike somewhat, hit another high, correct, retest, come down here, and then correct again with another spike to get up in that zone, to get up in this zone here. So it's pretty much every pop up is being sold now. So when you have weirdness that comes into the chart, you have to look into the order depth and see what's going on behind the scenes with the algos. And we've been over this. The Fed really is in a hard place right now because they really cannot raise interest rates. To do so would decimate the economy, and they know that. So to fool the people yet again, they're making you believe that they're going to do it in December. Have we learned nothing from the prior months this year? How many times did everyone say that it was going to be a rate hike, and it never came? It can't. You're looking at 3 or 4 times now. So this is the boy that cried wolf a little bit too many times. So if they do something like raising the rates in December, you have to ask yourself a question: why? Why would they do that now, right before Trump is to take the reins? All right, that's not cool. You don't do stuff like that. You let the next administration deal with that issue. It's not something that has to be done right now. They do not need to raise. So that's another issue too. Not only can't they raise rates, but they don't need to raise rates. That's one of the reasons that you see the gold being crushed like this. Okay, because it's an inflation hedge. And if you're saying that the Fed is going to raise rates, then you don't need to to hedge your portfolio by buying gold. Okay, you don't need to, because now interest rates are going to be going up, so those bonds now are going to have premiums on them. So that's what they want. So instead of low yields, you're going to go back to an environment of higher yields. So bonds will be looking more attractive because they're going to be yielding more. All right. Remember, when it comes to bonds, interest rates is what you want. All right. That's what you want. You want a high yield. So, the face value don't really mean too much. Is that yield was what they're looking for. So if yields are going up, you make more money. All right. When yields are low, that's a good time to borrow. All right. But when they're high, that's a good time to invest. All right. So that's what they do. So that's what's going on right now. You have a lot of different factors coming into play with the gold right now. So if you are holding the physical, this right here affects you too, because if in case of emergency, if you needed to liquidate and get cash for whatever purpose, you will be taking a hit on your portfolio. All right. So with that being said, this is what played out for the week. Here is JDST for your miners. All right, for your junior miners. So we take a look at the daily chart here. You will see that you had a nice run up here, then it corrected, and then it shot right back up again. Because every time they sell these rallies in gold, this is what you get. This represents, the gold price getting smacked. Gold price gets smacked. Gold price corrects. Gold price gets smacked. So this is where we are. All right, we're in a smacking process. So the JDST did very well for us this week by going in and buying these shares. Whenever they're going to smack down the miners, you want to go ahead and get along the JDST. I mean, that's just how it is. All right, same thing with the mining shares. You got your dust here, same story. All right. So here we go. Boom. Gold gets smacked. Gold corrects. Gold gets smacked. Same situation. So when you see the GDX taking a hit, you want to get long the dust. When you see the GDXJ taking a hit, you want to get long the JDST. All right, that's how that works. All right, now let's take a look at where we are in the GDX. So not GDX, GLD. I'm sorry. All right. Okay. As you can see, it's doing the same thing as the gold futures. It's moving lockstep with the gold futures, right? So if you're long GLD, you're taking a hit. All right. You shouldn't be long in this process in the GLD anyway. You should have been out of the GLD up in here, where you got the signal and the warning. All right. You would have seen that, so you would have got out of it. You would have seen that 9/11 crash alert coming, when it was up in here, and you could have moved your stop and got the heck up out of there. And then you could have came in and excuse me. Let's see here, GLD, GLD. All right. See, as gold was getting smashed, your DGLD had you profit on the downside of the gold. See, that's how you had your portfolio. You're holding your physical, but you're taking a hit in your valuation on paper. So to clear that up, you get long the DGLD, and here we go. See, this is the JDST chart in reverse. I'm sorry, this is the gold futures chart in reverse. All right, the DGLD it looks exactly like the gold futures chart upside down in reverse. All right, so this is what you're seeing. You're seeing that this is poised to really take off if they continue to smack gold. So every day they smack gold, here's your DGLD, and you can do what you need to do in this market, and that's what we were focusing on this week. Taking a look at the JNUG, JNUG let us down. We got stopped out of the JNUG only to get along the JDST because that's how you do it. All right, you can see up in here, stopped out. We played the bounce up in here. We played this bounce only to be stopped out and getting along the JDST. See, that's another thing too. The volatility stops are there so that you don't get hurt. Sometimes it may look like it doesn't make sense because those ranges narrow, but it's designed to get you out, because if there's a possible turning point in the shares, you want to be liquidated anyway. You don't want to be long when the market's coming off. You don't want to be long up in here. See these 3 bars here? You don't want to be long these 3 bars when this is happening. If you're long coming into this and then you have to ride all this down, you don't want that. You want to be out. All right, you minimize those losses that way. Okay, so that's how you play these things. All right, everyone's talking about, the stock market collapsing and crashing. Okay, even a broken clock is right twice a day, right? Okay, look, at some point markets rally and at some point markets crash. So when it happens, that you're not vindicated, because that's the nature of the market. The timing is what separates the men from the boys. To say that, try to calling tops and bottoms in markets is hilarious, and I laugh when people try to do it. You don't know when the market is ready to do something until it's already doing it. All right, and it's giving out signs and signals in the algorithms that it's doing it. You don't see no signs and signals in the algorithms that this thing is topping out. Just because you see this elongated period like this, that means nothing. Look at this. They were saying it this whole time too. Oh, the market's topped out. It's about to crash. It's about to crash. It's about to crash. Oh, it's moving out. It's crashing. It's crashing. Oh, right. Everyone who was talking about the crash, the smash, the splash, the bash, the rash, looks foolish now, because what did the Dow do? New highs. Every day they keep saying, they come out making videos saying the market's crashing, it's going to crash, it's going to crash. The market's hit new highs. Every time they say that and do that. New highs. So at some point, you want to start asking yourself a question. Why do you believe that when the chart isn't even telling you that, and the market depth and the algorithms aren't telling you that either? Where are you getting your information? And the only answer that you can come up with is some insider who is a market participant on the control side is telling you when they're going to flip the circuit breakers. Basically, that's basically what it is. Just like I warned everyone during the election. Remember the night when I covered this? During the night of the election, I told you, I said the market is pricing in a Donald Trump win. See, that's another thing too. You have to be willing and nimble enough to change your belief system when the evidence moves contrary to your belief. That's the mark of humility. I thought that, Hillary was going to be a shoo-in and within that electoral process. But then the night of the election, I saw here that the market was screaming something else. And so I had to make a quick video and told you guys the market is pricing in a Trump victory. And then I also warned you further and said any downside you see is going to be short-lived. Don't fall in love with it. This is not a market crash or collapse. They're going to bring it up. Everyone was hollering Brexit 2.0. I said, no, this is not going to be a Brexit. All right? The market's not going to fall down and stay down. They're going to bring it right back up. I was warning everybody. What have I told you guys who follow me for, these last 6 years on YouTube? What have I told you guys? Do you remember? I said before they balloon something up, they crash it down first. And if they want to crash something down, they fatten it up first. Well, what's been happening with the stock market? They've been fattening it up and pumping liquidity into it. So when the day comes for correction, it is going to be massive. but it's still not going to be a crash, and I've done enough videos on that. Same thing with gold. Before gold can really do what I told you about with that 1,000% return in the miners, they got to crash the market first. See, that's the part that most people aren't prepared for. I teach this ad infinitum. I've been saying it for the last 6 years, teaching you guys market theories. All right, they don't teach you at Harvard Business School. You're not gonna learn this in Yale, your Ivy League schools. You're not gonna learn this. These are just the ways of the markets. So at some point, yeah, your Dow is gonna correct, but it's not doing it yet. So stop setting dates. Stop saying the market's going to crash on November the 17th and November the 18th, because you look really foolish right now as the market is closing at new all-time highs. You know, there is an argument to be made about dates. You go back in my archives. I did a video series on the price time conundrum, and I illustrated that there is factors that we cannot yet acclimate into the algorithm to show that relationship between price and time, because there's a breakdown within the price and the time. It's really complicated. I show you numerous examples. I don't even really know if what I titled the video. I know it's maybe price or time. Go on my channel, search it. Type in price and time or something. It'll come up. You'll see it. And I do believe I use some NASDAQ charts to prove that. But there's room to make those kind of plays and calls. Elliott wave technicians do it all the time, and they use their theories to set dates and times of when waves will complete or finish, or where you are within a wave and all that stuff. Those people who are supporters of that and adhere to that, more power to them. But there's a problematic situation within that approach as well, and I've explained that before too. So at any rate, though, setting times and dates and calling tops and bottoms is foolhardy. It's fun. We like to do it. I do it, sometimes. It's fun. But one thing, you guys, I want you to take away from this video, this end of day report today, is that it's fun. It's cool to have fun here on YouTube and say what our beliefs are and what we believe. But at the end of the day, we got to keep it real with the charts, okay? And let the price action correct us and tell us when we're wrong and what the market is going to do or what's what. Everything that's happened, everything that can be known or is known is already factored into the price at that moment. Just remember that everything that is known about a market is already factored into the price. All right, price is another representation of the hive mind, if you will, the collective mind of the market. The collective mind of the Dow right now, this chart you're looking at, is saying that this is the price. This is the actual price of the Dow. This is where it should be, all things taken into account and being equal. This is not saying anything about a crash, okay? I just want to let everyone know, be careful who you listen to and who you follow when it comes to, trading and investing and stuff. Everybody and their mother wants to be a trader and an analyst. If it was that easy, my goodness, there would be no poor people. Everyone would be billionaires. It's not easy. It's taken me 23 years to develop my algorithms, and let me tell you, it is not a cakewalk. Trading and analyzing the markets is difficult. And analyzing in and of itself is difficult too, because even though you may be right in your analysis or market direction, it doesn't mean that you're able to capitalize on that knowledge, on that information, on that guess, on that hypothesis. Trading involves more than just analyzing market direction. It takes into account timing, and there's a certain approach and discipline in how you approach the market, how you enter the market, how you manage the open position in the market, and when you get out of the market. That's trading. Understanding order types and order flow and market depth. and which exchange and service to use, and how to route your orders. And I mean, there's so much. I've done videos, numerous videos on that too. So be careful, you guys. That's all I gotta say. I mean, all my videos are on here. I never take down any of my market videos. You can go and look at any videos I've uploaded. They're there, good, bad, or indifferent. They're there. That's my track record. It's right there for you. All right. So regardless of what we think and what we feel, price is what we go by. So even if I think, and I told you right now, I believe the Dow is going up over the next 3 to 5 days, that's all fine and good, but we have to take what the market gives us as it's going along. And if it looks like that market call is incorrect, you got to be able to move and pivot and take advantage of it and get short if the market corrects. I mean, that's trading. All right. So, saying what do you think? What's your prediction? That doesn't mean anything. Predictions don't pay the bills, folks. Price pays. You can take your predictions and you know what you can do with them. And I love predictions. I like predicting and saying things. But we're going to be wrong more than we're going to be right when it comes to predictions because no one knows the future. But we're talking about trading here, not crystal balls and prophetic utterances. We're talking about trading. How do you make money in the market even when you're wrong in your analysis? That's trading, folks. And you need pulse waves to do that. Pulsewavetrading.com. That's pulsewavetrading.com. And soon we'll have registration for the academy that I'm going to try to kick off on December the 1st. More information will be forthcoming for that, showing you where you can sign up and all that good stuff. But check us out on pulsewavetrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So take what you can, give nothing back. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Friday, November the 18th, 2016. Well, you can see here the gold futures chart as gold dipped down to a new low of 1201.30 before rebounding somewhat to close at 1207.30. You can see that the downtrend channel is still intact. We are in a negative pulse wave right now, and the market is hitting new lows. So that does not say that we've hit a bottom. The market is still searching for a bottom. It's still in a selling mode right now, or a corrective mode on the weekly chart. I do believe that we're in the process of forming that bottom on the daily chart because you can see the elongated resistance line here. So we'll probably still search for this bottom, be somewhere soon around here. Then we'll just consolidate a while and allow these trend lines to converge upon each other to form a turn back upwards again. If you take a look at the weekly chart, you can see a little bit better picture here, and you can see we do have a couple of weeks of consolidation before we hit the next ramp. All right, and that should be a nice reversal catapult, and then from there we should continue to move sideways to slightly higher until we get to the end, the last ramp. So 1300 is going to be the battle line. That's the current resistance level. So as long as the market can get back up there and close there, it'll be fine. But as we are right now, we're $100 away from there. So this is showing that there's still selling pressure. We took it out, and so when you see these like this is not necessarily real, and the market will eventually at some point come and take that out. We did it here too, the first, not really a spike like this one, but you can see the idea here. Spike, correct, take out the spike, form another one, correct, rally, come down here, spike somewhat, hit another high, correct, retest, come down here, and then correct again with another spike to get up in that zone. You can see this is the longer term chart. You can see that We're in a negative pulse wave on the weekly chart, and we're in a negative pulse wave on the daily chart. So we're not done selling yet. We haven't bottomed in this particular phase of the correction just yet. Still in a downtrend channel, and we're going to need to do something about that. But until then, this is where we are, and this is a spike high right here. So this high is not really a strong resistance. It's really a fake high because it was a spike, just like you did back here. You spiked, and then the market eventually